Welcome back to the morning show here on Arise News. The Central Bank of Nigeria's decision to restrict individuals and local companies from investing in its open market operations auctions has narrowed investment choices for pension fund administrators and fund managers in the country to treasury bills and stocks. Only the banks and foreign firms can now participate in the auctions of the Apex Bank. For the pros and cons of this emerging situation, we are now being joined by Johnson Chukwu, stockbroker, capital market analyst, and managing director and chief executive officer, Cowrie Assets Management Limited. Johnson Chukwu, good to have you again on the morning show.
Good morning, sir.
Good morning. Thank you for having me.
Well, you listened to my introduction. The CBN took a decision to prevent individuals and local corporates from trading in government securities. This is like a follow-up to the policy of the central bank on loan-to-deposit ratio for deposit markets. It's been a few days since the CBN came up with that new directive. How is the market responding? What are the implications?
Well, let's start from what are the implications.
Yes.
The implications are that the central bank is trying to push liquidity to the credit market. And CBN is also trying to minimize its cost of funding the federal government. Because basically, the OMO instrument is basically the instrument the central bank is using to fund the federal government and or manage the system liquidity. So the central bank is trying to minimize the cost of managing system liquidity. And when I talk about what I had to bring it to fund the federal government, basically, the liquidity coming into the economy is not coming from credit expansion. It's coming from the central bank's ways and means initiative of funding the federal government. That's where the liquidity is coming from. And what the central bank is dealing with is that they fund the federal government injects the liquidity back into the system, and the central bank struggles to mop up that liquidity. And in that process, it has to pay for pension fund administrators, individuals, the banks, to invest in those short-dated instruments, given the yield threshold. So the central bank is trying to cut down on that cost. How has the market reacted so far? We've seen some moderation in yield, particularly of the long-end instruments. We've seen some moderation of about 20 to 30 basis points on federal government debt instrument bonds. We've also seen some moderation in treasury bills yield, not as much as one would have expected. We've seen a moderation averaging about maybe 40 basis points. But where we've seen the greatest impact so far is in deposit rates. We're seeing banks refusing to pay higher rates of interest on existing deposits, or those deposits that are coming in afresh. And we've seen instances where the banks are renegotiating the rates on which they are paying pension fund administration deposits they have with the banks. So the greatest impact we've seen so far is that the banks are pushing down deposit rates to as low as reducing by about low as 200 basis points, which is about 2%. That's what we're seeing so far. The other impact may be delayed. We're yet to see how foreign portfolio investors will respond. And why am I talking about that? Because foreign portfolio investors are not excluded from buying OMO instruments. But the foreign portfolio investors are also going to be conscious of the liquidity of those instruments they're going to invest in if there's no secondary market buy, or if the major fund managers are unable to buy it. So you may see a slowdown in foreign portfolio investment in the market as a result of the reduction in liquidity of those instruments by coming from exclusion of PFAs, corporates, and individuals.
But doesn't this also make us very vulnerable to hot money from foreigners as well?
It's actually going to keep away the hot money, because today we are dealing with a slowdown in foreign portfolio investment, principally because they are looking at the equity market has become unattractive to them, so their interests have largely been on fixed income instruments. So if we are seeing liquidity in fixed income instruments will likely be moderated as a result of this policy. If the pension fund administrators, who are the largest fund managers in the country, are not allowed to buy primary or secondary market or more instruments, then those who hold those instruments will not have a willing buyers that they can always flip it. So if you reduce liquidity in any instrument, it keeps away investors from that instrument.
Now, but how does this directive help to achieve the overall overarching goal of increasing lending to the risk sector, because that was where the CBN started from. And then the CBN observed that, the deposit money banks tried to circumvent a policy that was supposed to, activate growth and increase lending to the risk sector.
Well, like I said earlier, what they are trying to do is to push liquidity to the credit market, which means that if the banks are paying lower interest rate on deposit because they fund the funding organizations, we are the PFAs, are left with minimal, very few options, investment options. The investment options the PFAs would ordinarily have, because they are not allowed to invest in foreign instruments, is either they buy the federal government bond, they buy the federal government treasury bills, they buy Chukwu, they invest in equities, or they invest in a very few infrastructure fund or equity fund, because those funds are very few in the market today. So the major instruments you have, which almost account about 80% of the short-dated instruments you have in the market, if you take out that portion, the PFAs will be left with very few options, which will include leaving their money with the banks. And like I said earlier, the banks are underpricing those deposits. So if the banks can get the funds at low interest rate, they are now incentivized to lend at relatively lower lending rates. So that is the logic of it. But you see, economic agents are rational. The PFAs will look at all their options. One of those options, given that their funds are long-term in nature, it could also include buying federal government bonds, which are long-dated instruments, but higher yield. Because we still have federal government bonds trading in the region of 14, 11, 14, 12, 14, 15. That is 14.11%. So that will remain attractive unless the rate yield on those instruments also come down drastically.
Okay. And this is one policy that the CBN has now come out with, of course, to support the loan-to-deposit ratio that they're trying to get banks to increase now. Are there any other policies that you either potentially see the CBN coming up with to support their framework, or you would suggest to the CBN to support their framework of increasing the LDR, loan-to-deposit, of banks?
Well, the central bank has also come up with a new policy, an amended policy on the loan-to-deposit ratio that increased it from 60% to 65% at the end of December, which means the banks will only have just 35% of their liabilities or liquidity to invest in other instruments to maintain their liquidity ratio of 30%. And it simply means that, of course, liquidity ratio, investment in treasury bills and OMO all qualify as liquid instruments. But the bank will only have a headroom to play with 5% once they achieve the 65% new lending loan-to-deposit ratio. Beyond that, there are also areas that the banks are concerned, which I don't know if the central bank is the most appropriate agency to handle that, which is the issue of risk sharing. The challenge that the deposit money banks have in lending is not just the fact that there are other attractive instruments. There's still no other attractive instrument that yields returns higher than loans, risk assets, quality risk assets, because average lending rate still remains above 20% in Nigeria. There's no federal government instrument that trading above 15% today. But the challenge they have is that the risk of default is high. The economic environment is so challenged that the risk of default on credit is quite high. And the banks are looking, why should I lend at 25%, for instance, when the likelihood that I will lose 5% or 10% of that loan is high? I would rather do an investment that gives me 10% or 12% or 13%, and I'm sure that that investment will come back when it matures. So one of the areas that we have to address is the issue of risk sharing. We have to evolve a model or a process that will allow deposit banks to lend in some sectors that are considered as critical to the economy, but have high risk potential, so that an agency of the government can share that risk in case the risk crystallizes. So if you pass on the entire risk on the banks, they are not likely to go to take the risk, because some of the risk environment
they don't want to take the fall alone.
Are systemic, as a result of the macroeconomic environment. So such risk they should be able to pass on those risks to a risk-sharing agency of the government. And that's part of the problems we have.
Anyway, let's move away from the OMO and talk about something else. Now, of late, you see that the Nigerian president has been attending a lot of foreign summits. I mean, we were at the Forum for China-Africa Cooperation. The president was also in TICAD, in Yokohama, Japan. Most recently, he was in Sochi, in Russia, to attend the Russia-Africa Summit. At the moment, he's in Saudi Arabia to also attend the Foreign Investment Forum. We see Nigeria, at all these fora, talking about attracting investment into the economy, getting business leaders around the world to pay more attention to opportunities in Nigeria, either in the railway sector or oil and gas, or security. Now, what's your assessment of this, engagement with the international community at the level of business? Do you see signs of any impact already within the economy, or you think we just go on these trips and we're not gaining anything?
Really, it may be difficult to say whether the impact of the president's trips to attract investment has begun to materialize. Some of those things could take some time to come. But there are basic things that you need to do. You need to do housekeeping, internal housekeeping or domestic housekeeping as well. The president, one of the trips that seemed to have attracted immediate or actionable results is a trip to Sochi, where the president came back with an understanding with the Russian government to reactivate or complete Ajakuta Steel Complex. We hope that will come to fruition immediately. But in terms of the direct benefit of the president's trips, some of them are going to take some time. Some of them will actually be a matter of burnishing the reputation of the country, presenting Nigeria in a positive light. We recall at the beginning of the president's tenure, his comments during international talks were mostly negative. They were statements that would ordinarily shake the confidence of foreign investors. I mean, the president has moved away from that. He's now speaking positively about the country and asking people to come and invest in the country. In the past, it used to be that we are not trustworthy to be associated with. But we've gone beyond that. The president is obviously more business-oriented, given what he has done in the past couple of weeks or months, empaneling an economic advisory council made up of free market thinkers. But if you want to take what are the direct benefits of these visits, I would rather deal with the domestic issues that will make your economy attractive. One of which we've seen recently is the improvement on ease of doing business. We've improved 15 places from 146 to 131. Those are the things that are important. You need to also look at our global competitiveness index positioning. We need to look at the heavy lifting locally, the issue of infrastructure, issue of insecurity. If you address those things, the world will come to you. I'm not aware that the Dubai Sheikh, the ruler of Dubai, goes around the world begging investors to come. The key thing is that you must present your unique selling points. It is not enough that we go there and ask people to come and invest in our country. We must be going there to tell them these are the reasons why you have invested in this country. The return on investment is 20% or 30%. Not when your economy is growing at 1.94%. The investors are going to do the analysis. What you encounter in most of these instances are feel-good interaction with the international community that say, look, Mr. President will come to your country. But they have to do the figures. They have to do their figures and analysis. What's the return on investment in your country? What are the supporting infrastructure for me to set up?
Well, Chukwu will need to take a short commercial break. When we come back, then you'll continue. The conversation continues shortly. You're still watching The Morning Show. You're still watching The Morning Show here on the Arise News channel. And still with us in the studio is Johnson Chukwu, stockbroker, capital market analyst, and Managing Director and Chief Executive Officer, Carry Assets Management Limited. Now, before we went on break, you were talking about how we can take the best advantage of our participation in international summits. And you were saying it's not just to go there for a feel-good appearance, but also to worry about
return on investment.
What we do at home.
Yes. The basic thing is it is good to go out there and sell your product, but there must be a product you're selling. You just can't go there and sell nothing. If you go there and you have no unique selling proposition, the best you can get is some level of courtesies from international investors or the host countries. You must have values you are proposing to investors, and those are domestic issues. And what I mean by domestic issues, they are looking at what is the investment climate in your country like? What's the return on investment? What is the ease with which I can get legal justice in case my property right is infringed on? What length of time will it take me to register a business in your country? How long will it take me to get electricity? How do we resolve issues of insolvency? These are issues associated with the ease of doing business. Like I said, we've seen some improvement in those areas. But we also need to look at the other aspect of measuring investment climate, which is Global Competitiveness Index. We need to address some of those key things. We need to address core issues that called heavy lifting with, as it relates to those factors that dampen Nigeria's investment climate, issue of insecurity, issue of infrastructure, power supply in particular, transport infrastructure. By the time you get those things right, my dear brother and sister, I can tell you that you don't need to step out of your borders of your country. You don't need to even get to the airport before they come. They will come. And just like the leader of the Vice said, if you build it, they will come. Why are people going to places like Rwanda today? Why are they going to places like Ghana, Indonesia? We have seen countries in the last couple of years turn from very Paris states to models of investment destinations. But the basic thing, I have to get the domestic issues right. And then the public image of the president going to those countries to present those domestic issues. Because basically, the president should be going to present domestic issues. Come to my country to invest. We have a very friendly tax environment. We have some of the most important infrastructure. You are sure of your security. You are sure of good return on your investment. Those are the things you are going to tell them. You're not going to just come to investors forum and say, you just come and invest. The key thing that they will tell you, thank you, sir, will come, and they will not come.
Then they will do their own checks, of course.
Thank you.
Absolutely. And we certainly do need more long-term investments coming into the country, more investments like Telerams with the Lekki Free Trade Zone. But of course, you also get pushbacks at home from Nigerians who may feel their jobs are either being taken or they're being stripped of certain opportunities that they would like to push forward, which is another case. But now that we have the land borders on a lockdown in the country, is that attractive for investment?
I was looking at our ease of doing business, and one of our lowest score was on trading across borders, where we scored only 29%. Wow. That's where we got the lowest score of the 10 criteria for measuring the ease of doing business. And it simply means that even the IMF and World Bank recognize that the fact that our borders are difficult to navigate, and I'm sure that those assessments were actually done when the borders were still passable, where could commute across the borders. But now the border is on lockdown, I'm sure our rating in that area will actually decrease materially below where it was at the last rating. But the basic thing is this. My approach to the issue of border closure is that it's an ad hoc measure. It does not address fundamental issues. Those fundamental issues that can we produce those that are coming through the borders cost effectively? Or do we even have the capacity to produce enough of those products coming through the borders? Why are they not coming through the sea borders or the seaports? But because of our tariff environment, because of the difficulties of dealing with Nigerian customs at the seaports, because of the complexity of clearing goods at the seaport, because of the bottlenecks you have at the seaports. So why would you want to bring in vehicles through the land border instead of coming to the seaport? Why are they bringing in rice through the land border instead of to the seaports? We need to address those issues. But the most important thing is that the issue of restricting importation of any commodity should be an integral part of your industrial and trade policy. it should not be a standalone measure. Because if you restrict the production of any commodity, which you are not producing to meet local demand, you will at best force that product into the black market, where they will command higher price because those who have to bring those products will have to pay some tax. In most instances, not to the government, but to some tax collectors along the borders to bring those goods in. As long as any product is in demand in your community, and you do not produce an alternative of those products will certainly find their way into your market. The only thing is that they'll come at prices that are materially higher than what they would have landed. And the benefit of that higher price will not be tried by the government, but by some nebulous economic agents. In that case, it could be customs who are collecting higher taxes or higher settlement to get those goods in, or you have smugglers who are paying to get those goods in. So that's the challenge we have. The issue of border closure should have come with an integrated industrial policy. We have the issue of, take for instance the issue of rice. It is very clear from what we're seeing today that we are not yet producing enough rice to meet local consumption. My hope and my prayer is that we will feed ourselves. Because one of the things I said, I think in one of your programs, that most countries will eat what they produce, because food is part of your culture. So the food you are exposed to while you are growing up is normally what you prefer. And that's when we travel to places like England or America, we will look for Nigerian restaurants to go and eat swallow. Yeah. But the key thing is this. If rice has become a major staple in Nigeria, it behoves on us to ratchet up, to build up our capacity to produce rice to meet local demand. But today, we've not achieved it. And that's why you have seen a spike in the price of imported rice. Because if we have local production of rice enough to meet consumption, what would have happened was that the locally produced rice will take over the market. Mm-hmm. Because if people can't see the foreign rice, they will buy the local rice, as long as it's a staple. So the key thing are those things that are coming to the sea, but through the land borders, we must have a policy to incentivize those who are producing them. Rice, I know the government is doing a lot to incentivize that. But the other products are coming through the land borders. And in the case of rice, we have not achieved local sufficiency. So you may need to come up with a policy that will allow rice to come in so that you do not stifle the very poor people who have to now buy rice at the very exorbitant prices.
Well, incidentally, the CBN governor is quoted in the papers today as saying that while he does not agree that the borders should be closed permanently, but that the closure of the borders, the land borders, has helped Nigeria to create jobs, to boost local demand and productivity, particularly in the production of rice, paddy rice itself, and that also in the poultry sector, we've had a lot of improvement in terms of poultry, products, and that, many Nigerians are making a lot of money from rice production, from poultry, and from other sectors of the economy. But you seem to think that the closure of the border is relatively a negative thing. And I read a report saying that the trade sector in Nigeria, in the last 8 quarters out of 12 quarters, has been recording negative growth. And the analysts indicate that it's the closure of the border that is partly responsible for this. So who is telling the truth here, the central bank governor or the analysts?
Okay, what I said is does not completely contradict what the central bank governor said. In the first place, I said the closure of the border is a temporary measure. And the central bank said, the governor said it won't be indefinite. It's not an indefinite, it's not a permanent closure. I also said that for you to close the borders, you must have a mechanism or a process that will stimulate production of those goods that you are restricting their importation. But the truth is that most of the products you talk of are not like it's not like you have built capacity and you have capacity under utilization. So you have a factory that can produce this, but the factory is producing at 20% because it is being competed by products coming from outside the country. You are saying that you don't even have the infrastructure to do those things. If you have to take, for instance, rice, it takes an average of 6 months to plant and harvest rice. 2, you have to look at whether you even have the environment in terms of climatic conditions that will lead to the full production of enough rice to meet local demand. And take, for instance, the Southeast. They only produce paddy rice in the Southeast because they don't produce upland rice in the Southeast. And because they produce rice in swamp areas in the Southeast. Because there's no irrigation anywhere in the Southeast as to allow them to produce upland rice. So even if you say that the latent capacity to produce rice is higher than what it is, you need to irrigate those rice farmlands so that they can produce not just paddy rice, and they can do double two-season rice cultivation. Until you do that irrigation, you're not going to, they're not just going to wake up and produce more rice. In the north, they produce only upland rice. They can't produce paddy rice because they don't have the weather climatic condition to produce paddy rice. So there's nothing you can do about that.
Yeah.
So the key thing is this: have you built the supporting infrastructure, the facilities that will lead to just increasing productive capacity suddenly? Remember, the border closure was just a sudden incident. The government said, okay, close the borders. And they said, close it further. So you don't have that capacity already. Like I said, if you have a factory that says, look, we're producing this commodity, but we're producing only 20%, and you suddenly see an uptick in demand, they will just ratchet up production, but you don't have that. And I said it has to be part of an integral, it has to be an integral part of an industrial policy, your agricultural policy, your trade policy. But ultimately, the border closure will not solve our fundamental issues because you are not going to be an island to yourself.
No man is an island.
We have subscribed to African Continental Free Trade Agreement, which specify that once it becomes operational, all the land borders will be left open. So what are we going to do at that time? We're going to be an island in Africa?
Even before the AFCTA, we have the ECOWAS protocol.
Exactly.
But the Nigerian government is saying that our neighboring companies violate those protocols. Anyway, thank you very much, Johnson Chukwu. Always a delight to have you on the morning show.